Welcome back to the channel, guys. This is our series where we do some videos about informative information in trading, and this is intended to give valuable information to all traders to see about strategies, about risk management, about entries and exits, and analysis of any currency we choose to. So today is a video about a certain market pattern that always works best for us. So let's jump right into it and see how it is. So this is a video about a market pattern that is a rising wedge and falling wedge. So I've chosen three currencies here for good examples, which is AUD JPY, GBP USD, and AUD CAD. So let's first jump into the 4-hour time frame. Right here we have two very good examples of a falling wedge and a rising wedge. We are going to look at the dynamics of this chart pattern, how it works, where you can put your entry, where you can put your exit, and everything in between. So for example, we had a upward trend right here, a very strong bullish move, and at some point the move was exhausted and started retracing back to the downside. There was a good indicator that the trend is trying to slow down, which was a big push to the downside and a retest of the same zone and a rejection, again a move to the downside, and this was a good entry point. This is a 4-hour chart. This was an entry point that did properly here, something like 100 pips. So you started seeing a move in the sideways direction, some kind of a range being created, but in the long time it took like a full week, and it created a pattern here that is a falling wedge. As you can see, the price is declining, the highs are decreasing, so that we have higher lows and we have lower lows, but the highs are decreasing more than the lows. So it means the market is trying to change direction, but it's not direct. This is an indirect change of direction. So here you can see a pattern that is forming. Let's try to put some arrows right there to see. So here you can see such a pattern being created, and then it breaks out right there. So that is a falling wedge. This is how it looks like. If we go into the 1 hour to try to expand on the charts, so this is how it looks like in the 1 hour chart. So this structure was being created through the course of the entire week, and it broke out right here on a 30th of June. Now when a rising wedge, when a falling wedge is created, you wait until it has broken to the upside, because a falling wedge always breaks to the upside and a rising wedge will break to the downside. So when you see a break, you can wait for a retest or enter straight away within the second hour candle, or wait for a retest to get a confirmation of change of direction. So right here we are looking at a retest, which is this. So here was our entry point, because there was a rejection of this zone right here. There was a rejection of this zone right there. So this was a confirmation of entry to the upside. And if you can see, always the stop loss for this is very minimal. You don't need to put it below the last structure down there. You can put it a little bit below this, somewhere here or here. So it will be something like 40 to 50 pips, and then you target the entry points, that you target the sell zones of that falling wedge, so which would be this and these two zones. But good enough, it went to the first zone and it didn't move to the second zone. So here we can see it was an entry was right here, or after either here or here or here. There were three entries, but the stop loss had to be below here, something like 50 pips, because this is moving 100 pips on each line. So 1 2 3 4, I think it would have been 30 to 40 pips, and the target could have been also 30 to 50 pips. So this was a 1-to-1 risk return trade, and it could have been a good opportunity. I don't remember properly if this setup we placed some, we got some positions on this one or not, but for the fact that we're just looking at examples of wedges, this is a falling wedge, and this was a entry buy open position, and it made some good 50 pips, 50 to 40 pips. So that is one of a pattern that you can also look for when you're doing your analysis to look for entries. That is a falling wedge. And then let's try to look at a rising wedge. This is a rising wedge. This is created when you're seeing higher lows being created and higher highs being created, but the highs are rising slowly than the lows. So the lows are getting higher at a faster pace than the highs. So this will create always a rising wedge where the price is rising, but the highs are rising at a slower pace than the lows. So here the lows, we mean this. The lows, we mean this. This is a low, this is a low, this is a low, low, low. Now, if you see the lows that are being created, they are rising faster in price than the highs. So this is a high, this is a high, this is a high. The higher points of the price structure, they are very minimal, and the lower lows are increasing faster. So this will end up creating a rising wedge. Now, how do you trade the rising wedge pattern? You wait for the breakout. Let's first expand the chart here. So this was a breakout right here. There we had our breakout right there, and then we had our retest right here. If you go into the 4-hour time frame, it is very, very clearly seen right there. Breakout and retest of this, and this is always your entry point at the retest. And you can see how that setup was a very good one. This falling wedge created one of the best entries of the week that went straight away to, it was 200 pips on the same day. So this was a very, very good entry on the rising wedge. So let's look at some other currencies to see how it looks like. So this is GBP USD, and in the previous week we were seeing a falling wedge which was seen at the end of the downward trend. We saw that falling wedge being created, and we waited to see how it's going to break out. So the breakout was very clean. It broke out and retested a little bit and started moving straight away to the upside. So this was a very clear indicator that you can enter your position right here and keep your stop loss even very, very simple. It could have taken something like 30 pips in your stop loss, and you could have targeted 50 to 100 pips or 50 to 70 pips in your take profits. Or if this was your first TP, right here, if this position was to be your first TP, as you can see, and this could be your second TP, so this could have been something like 40 to 50 pips, and this could have been something like 80 to 90 pips with a risk of 30 pips. After the falling wedge, this was a retest to the upside, and it created also a very, very good opportunity right there. So we're going to look at some other example on AUD card. In the falling, in the downward trend, also it created a falling wedge. Now you have to notice that falling wedges will, most times they will be created in downward trends, but they can be created in any trend, upward or downward, but they are most likely going to be created in a downward trend. So this falling wedge right here was very clear. It made the move to the upside and retested. So this was possible to be entered right here on this candle right here, because it went up, made a retest here, simple retest, and then it made a rejection candle. This was an easy entry to the upside, and it created some good 40 50 pips, and then it came back into the buy zone of this falling wedge. It created a very, very good rejection candle. It came back and retested again, so it created a very good entry setup for a buy position right here and right here, and all these setups had a very, very good a simple stop loss setup. So it could have been something like let's see, 20 25 pips in the stop loss, and something like 35 to 40 pips in that take profit. So this could have been an easy 1-to-1 risk reward ratio, but it created some good 50 to 70 pips. I think let's see 20, 40, 50. I created a very good 60 pips in our return with a risk of 25. So that's a 1 to 2.5 risk return. So this falling wedge created a 1 to 2, and again there was a in this setup there was a very good key point right there that created a rejection on the same sell zone here. It created another rejection to the downside, so you could have got this entry from the falling wedge and this sell entry from the sell zone right there, and it created one of the best for the week in AUD card. It created a very good 150 pips for AUD card in the bearish side. So that was our video on falling wedges. They always create some good setups. You can get some short-term trends and long-term trends from the falling wedges. So thanks for watching, guys, and let's catch up in the next video. If you haven't subscribed, please subscribe. Share this video with all your trader friends. We always share good information about trading. Thanks for watching, guys. Keep it up.